What's up guys, welcome back to the Pro MG Money channel, back again with another video. And as always, it's your boy Pro MG Money. First things first, we'll always kick off speaking about the 50k giveaway. If you would like to get involved in the 50,000 Rand giveaway, click up there to watch the video so you know what you need to do. For the rest of us, welcome back. If it's your first time, please do subscribe. And yeah, let's get into today's video. Actually, before today's video, sorry that I missed last week Friday's upload. It's been a bit hectic around here, even though you don't know where around here is, but it's been hectic. And yeah, let's get into the video. So today we're actually going to be speaking about SAB Zenzele Kabili. I'm not sure if I've made a video on it. I might have made one and then just not uploaded it, or I could have uploaded it, don't really remember. But I think today's lesson is really going to be one in you need to learn how to deal with FOMO, and why sometimes, if something is in the news, it's in the media, we're all speaking about it, why maybe that's not always going to be a buying opportunity and that you need to wait for the specific buying opportunity. And actually, what we're going to look over today is actually an article on MoneyWeb titled "Black Investors Better Off Buying A and B InBev Shares versus SAB Zenzele Kabili." And then it says the gap between SAB Zenzele Kabili share price and its value has widened further. Then it starts by showing you just the price of A and B InBev versus the Zenzele Kabili. Anyway, let's read the article. There was a lot of fanfare around the launch of the SAB Zenzele Kabili at the end of May. The share price went on a strong run soon after listing, closing at 110 Rand a share after opening at around 45 Rand a share. That's the first thing that you need to see. It almost doubled, it not even doubled, it over doubled in value within the first day of opening. Let's keep reading. Despite warnings from various quarters, including less than subtle voluntary update from the company itself on the 11th of June, the share price went to and stayed above 180 for days longer. The share was trading at 100 Rand at the time of writing. The underlying asset, A and B InBev, is trading at around 918 Rand a share. Given that A and B InBev's price has dropped since the deal was struck, the value of SAB Zenzele Kabili has fallen from its initial net asset value of 60 Rand a share. So the gap between the SAB Zenzele Kabili share price and its value has widened further. In fact, it has widened to a point where black investors are better off buying A and B InBev shares rather than SAB Zenzele Kabili shares. Okay, that's just the main crux of it, and we're really not going to go over the whole thing, but it's nice to look at this table here where it shows you the value of A and B InBev shares that are owned within the Zenzele Kabili scheme. So the amount of debt that they had. So remember how the scheme works is that they took the first amount of money which they got from their first scheme. I think it's the Zenzele scheme. Yeah, they took that money. They took debt, so they took on some debt to buy. They took those two things and they went and they bought a whole bunch of A and B InBev shares. I think it actually was at a slight discount. Do they actually say how many it was? They didn't actually say how much it was. But anyway, they took that. So now you've got this debt, which is the money that they used to, or the money that they borrowed to buy more shares, and the initial money that they had to give you a net asset value of the entire scheme. Then the number of shares that SAB Zenzele Kabili has is this, what, 40 million shares, meaning the net asset value of it currently is 42. So it means the actual cost of the A and B InBev shares minus the debt that's owed gives you a net asset value of 42 Rand per share. Essentially what that means is that yeah, that's kind of what it's valued at when you do all of the calculations. And then it says the fair value of it right now is 30 Rand. So if we actually come up to the top here where it tells us, I believe this is today's price. Is it? No, let's check today's price. So today's price is actually 95 Rand, and according to this table down here, the fair value is 30 Rand. So it's trading at, call it, almost 3 times its fair value, and it's almost at double what its net asset value is, which goes to show you that in actual fact right now, anyone who's holding these shares is probably in a really bad place. They might not see it now, but as time goes along and you try to sort of unbuckle the value that you have in this, you'll actually see that pretty much everyone except for the people who are part of the initial, IPO, if you were able to get it at I think it was 45 Rand a share. Even if you got it at 45 Rand a share, you're crying a bit. But I mean, keep in mind, there's people who bought it when it was at 180 Rand a share, whilst the hype was still up, while everyone was going crazy about it. Think about that jump from 180 down to the 95 that it is now. It's pretty much halved in value, in a very small period of time, because this was I think in May, and it's currently September. So really those people are suffering quite a bit, and it's because a lot of people got into the FOMO. We had all heard the crazy numbers that they were exclaiming from the first scheme that they did, how people had increased their money, I don't know how many fold it was, and that FOMO kind of got a lot of people, I believe. And basically what I wanted to highlight today is just a lesson in not falling into the trap of getting involved in the FOMO of these things. I mean, imagine you bought at 180 Rand a share and you read that the fair value of that thing is 30 Rand a share. Now, I'm not saying to people who bought at 180 or bought at any other higher price should sell, because it doesn't necessarily mean that this is where it's going to end. This is only the beginning. If you're a real investor, a true investor, you would have done your due diligence. You would have, said you like the company, and understand what it is that they're doing, and waited until, you start to see a bit more from this. Because as well, in the time between when it came out and now, A and B InBev also hasn't been performing the greatest, but that can turn around at any time. The only problem is that if A and B InBev continues to do badly, then I think it's going to be even worse news for people who got in at 180. The share price is just going to keep going down and down and down and down. And if you ask me, in actual fact, the fair value is actually a bit harsh, if you ask me, but it is taking into consideration the debt that they have. But if you're in this for the long term, you're in it for the long haul, eventually the fair value will come up once this debt starts being paid down. It's just about how expensive is this debt that they actually have here. But with the dividends coming in each and every time, I definitely do think that there is value to be had here, and this will eventually come right, but not at 95 Rand, not even at the initial 60 Rand. I think that it had initially come out at. I'm not sure if it came out at 60 or it came out at that 45 that they spoke of. If you were a person who managed to get in at that 45, even at the 60, I would find a way to sort of take profits, or take some profits now, wait for the price to come back down, because this price will come down. The price of this definitely needs to come back to this 45, 60 Rand range. It really can't stay here forever. It does need to come all the way down back there, and that is where people like me, people like us who are smart, who are patient, who wait for buying opportunities, actually come in. When you look here on MoneyWeb, you'll see everything is red, and like I said, it's still going to get even more redder. The price that you buy this at is about 40, 45 Rand. Anything that's even less than that, I would keep going for it. And in actual fact, the price of NB InBev should pretty much stay in this same range. As the price of NB InBev comes down, the threshold at which you buy into the Zenzele Kabili scheme should also come down, a little bit as well. But basically, the long and the short of it is that if it was me, I wouldn't have gotten in. And I don't know, again, if I made the video or not to say get in or get out, but FOMO. When you hear people advertising or people speaking about a specific share scheme, how things are hot and so on and so forth, balega, like run away from it, because generally those things are, that coverage that they're getting is being paid for. And, the second something is being paid for, it means the inverse is that you are going to be paying for it in some or other way going down the line. All the money that SAB paid to market this new part of their share scheme, someone has to pay for it, and that person is generally you and I, the people who invest in these companies. So I would always, proceed with caution when it comes to things that are in media that have all this fanfare. I mean, a typical example that I can give you, my YouTube crush, Nicolette Mashile's, seems to be promoting this Lion Pride estate quite a bit. And not that it's a bad estate or I have anything negative to say about it, but these guys are really going hard on their advertising. I mean, whenever I go home at the robots, there's people who are there handing out flyers. They're on advertisements everywhere. They're clearly, you know, getting into influencer marketing, using influencers to help and, you know, continue what they are doing or selling their properties, which is all good and great. But what that means to me is that the properties that they're selling are overvalued, or it means that the price you're paying for those properties, they've tacked on all of these extra things to be able to pay for all of this advertising and this advertisement, meaning that they've passed on those to you and I, the people who are actually buying the things. So when there's hype about something, when there's or rather inorganic hype, let me rather say that, when there's inorganic hype, when, you know, someone is sponsoring things, when they are in everyone's videos, or, you know, we're all tweeting about it and so on and so forth, think about it, that where do they get the money to, you know, do these things? They might have the money, it might be a big company, but they'll never spend that money just for mahala. They are going to get it back some way, somehow. So yeah, where there's FOMO, where there's a lot of noise and rah, just, you know, wake up a little bit, think about what's actually going on there, and patiently sit back and wait. I personally am waiting for AB InBev, or rather for Zenzele Kabili, to come all the way down to the 40s, 30s. That's where I can get in, because I know over time the value will be unlocked, and, you know, we'll get up to that 180 that it once was. And if you bought it for 30 and you get all the way up to 180, it's really going to be, you know, quite a good thing. So watch this space. If this share ever gets down to, you know, the 40s, the 30s, I am going hard. I'm going to be putting quite a few shares into this, and hopefully we make a lot of money from that. But yeah, I hope this has been a good one. I am going to link this article, you know, down below. I think it's a very, very good article for you to read, and sites like MoneyWeb, even though they don't pay me, I think are quite good. You can get a lot of decent information just reading 1 or 2 articles on MoneyWeb. So yeah, that is it for today. I hope you guys are doing good, and yeah, let's keep this money train moving, and I'll catch you guys in the next one. Peace.